folks, we are looking at the Scout Sniper Enlisting module for the ICT Scout Sniper Field Guide. Okay, what are we going to be covering in this presentation? Well, obviously it's designed for those individuals that are not familiar with my concepts. It's going to be a broad range, comprehensive approach to using the concepts that are hands-on in the trenches type of application. For years I've been on the internet teaching conceptually the things that I do, and the actual employment or step-by-step approach to utilizing the concepts has evaded most individuals because simply they didn't put in the work and the exercises that were meant by taking the concepts and implementing them modularly through teaching videos. And what do I mean by that? Well, for those participants that have been following my work on YouTube, my own website, I had a blog years ago, and some threads that I put on some unknown forums. They failed to utilize the concepts in a demo account and use the concepts on a daily basis to familiarize themselves with price action concepts that are rather generic. And each video, if used properly in the library that I presented over the last few years, they were meant really to focus your attention on one specific component to understanding price action and the application of the ICT tools. What we're going to have in this 8-part series, and this is episode 1, so there's going to be a whole lot of dry stuff in the beginning, so prepare yourself for it, guys. It's like anything else. If you go to sniper school, you're going to learn a lot of theory first. You're going to learn a lot of trajectory, wind, all those things that are going to affect you taking a shot. Before you ever put yourself in front of a rifle and scope up your target, you got to learn a lot of the boring stuff. Okay, but I promise we're going to get to that good stuff that you're all looking for, charts and get me in, get me out type situations. It's all going to be in this course, but again, you got to go through the boring stuff first, guys. So what are we going to be covering? Let's look at that now. Obviously, we're going to be looking at briefly, I'm going to be introducing you what trading platform that I use in my teachings and in the practice drills that you're going to be employing in this course. And I'm going to give you a general overview of the type, quote unquote, of trades this approach specializes in, and what you should adopt as realistic expectations. And we're going to introduce you to the ammo and the usual targets. And I'm going to give you an assignment for homework, and it's going to be the mark. Alright, what trading platform are we going to be utilizing in these teachings, and what do I use for my own analysis in my videos that you see on YouTube and on the InnerCircleTrader.com website? Well, I use Forex.com Ltd. Now, it's very simple. You guys can go to Google and Google that, just as you see it here on the screen, and it will give you a opportunity to download the MT4. That's the letter M as in Michael, T as in Tom, 4 MetaTrader platform. It'll be it's a free download. Now, before we get into all of the debates as to what platform's useful and which one's better, blah blah blah, I'm not going to argue which one's better. Okay, I'm more or less gathering everyone to one pool. It's up to you whether you want to drink from it or not. Okay, so a lot of the tools that I share that are for free, I don't sell anything, I don't sell advice, I don't give signals or anything like that. I give resources, tools, and concepts for you to employ and use in a demo account setting. I do not advocate you using live funds, so everything you learn here is just for your development on a personal scale. I'm just going to hint and point in direction, and it's up to you to walk there and find it on your own. Okay, so now with Forex.com Ltd, again, it's simply for the utilization of their demo account. I do not trade live funds through Forex.com Ltd. Okay, I simply use it for a demo account only, and because it's a free resource, it allows me to share a universal medium that everyone can employ. You can trade through your own individual platform if you choose to, but for the concepts that we're going to be covering in here, the tools that I'm going to be sharing, and the indicators that you will be using or plug and play with MT4. Okay, so just so you know that you're not locked into using this, but there's going to be some tools that are rather unique to the MT4 platform, and it's just a plug and play type scenario. Now, I do not recommend you trade live funds with Forex.com Ltd. Okay, because I'm not an introducing broker, I'm not acting as an introducing broker, and I'm not a trade advisor, and I have no affiliation with Forex.com Ltd. I have no affiliation really with any brokerage firm whatsoever, so please don't ask me which one I recommend. If you choose to trade live funds, I don't do that. It's up to you. There's plenty of brokerages out there that you can choose from. I advise the viewer to use a demo account for practice purposes. Okay, so again, I can't stress it enough. Forex.com Ltd is simply being utilized in my capacity as a mentor in the demo account setting only. And now ideally, you want to use a demo account balance when you open up your demo account with Forex.com Ltd, or if you choose to do something else outside of the tools that I share for platform purposes, choose a account balance that you would be actually realistically employing if you were to go to live trading. Alright, what trades are classified as sniper setups? Well, precision point entry prices that are applicable for use of limit order entry. Now, if you're not accustomed to what a limit order is, we're going to cover that in later modules, and we're going to actually give you live examples of when you would utilize that in your demo account and how that works in favor of getting the best possible entry price and limiting your risk in terms of your stop loss. It's very useful in terms of controlling your overall risk and exposure to the market, but it doesn't completely eliminate the risk. It just helps you determine as precise as you possibly be in terms of your actual entry price versus what you may get if you did a market order and the slippage that comes along with that. Utilization of specific time of day criteria. So we're going to be talking about specific times of the day that the Forex market sets up rather routinely in terms of specific price swings and how we can utilize that. So by coupling precision point entry prices and utilizing time of day, that between those two right there, that really classifies it as a sniper setup, because we know exactly what we're looking for in advance and we wait for that to unfold. Now, we also will have an advanced knowledge of target prices for positive exit points. In other words, we anticipate where price may be reaching to, and based on that understanding, what specific price levels we may be looking to exit at in our demo trades. And the employment of strict risk management protocols. In other words, how much money are we risking and how are we quickly removing the risk and controlling the risk throughout the trade. And calm and focused disciplinary trading without emotions and impatience. That last one right there is a doozy. It's very, very difficult for majority of traders out there to attain this level of trading. But I can assure you it comes with time, and it comes with a strict adherence to the process of trading. And that means finding what niche you're best suited for as a trader. And that may be a specific time frame, like you may be a good short-term intraday scalper. You could be a swing trader. You could be a short-term trader, in and out in a day or two, or you could be a position trader. Okay, we'll give you some tools and concepts to help discern what that is for you on a personal level. Alright, what realistic expectations should you hold? Well, let's first start off with the realistic as you can get. You will lose money. live and or demo money with these concepts. I cannot guarantee 100% trading. No one can, no one ever will, and just don't expect it. You will not profit on every setup. As much as the setup may look like textbook conditions, you're going to still lose eventually on what may be the best looking cherry setup you can possibly have, and you still will see it fail, okay, because there's nothing perfect in trading, and you just can't obtain that level of trading, obviously. And you're obviously going to miss opportunities. So you may sleep during a particular time of day, or you may be taken away, by either attention or physically away from the charts, and so you can't take an opportunity. Maybe you are stalking, expecting it to set up, and you unfortunately missed it. You're going to have to expect that in all levels of your trading. I mean, I've been trading for almost 20 years, and there's a lot of setups that I see coming, but I miss it by a number of things, and it's no reason for me to beat myself up over it. I just know that that trade wasn't mine. The next one's going to come around. It's just like buses. They'll come by. If you wait around long enough, you'll see the next one come. I promise no wealth or easy journey to riches. Now, this is going to require you work, okay? I'm going to give you some specific criteria. If you stick to it, I promise you, your understanding of the market will greatly increase, and you'll be light years ahead of everyone else. Now, theoretically, the concepts will lead to a better understanding of trading for you. Every individual trader or developing trader that is watching this video series will not have identical results. Okay, so if you guys talk in chat rooms or if you share forums, do not compare notes in such a way where, okay, how much money did you make on that demo trade versus what I made? It's completely unique, and that's one of the beauty of trading, because you don't have to limit yourself to what everyone else is doing. Just simply because the tools that I'm sharing right now are being universally shared, you may develop another level of understanding on a personal level with these tools, and you'll make them your own. And by subtly blending what you're comfortable with as a trader, someone that may be a 30-minute chart trader will make significantly far less than someone that is utilizing a 4-hour chart. And the setups that set up on that time frame are going to be much larger in terms of magnitude. So it's very difficult for one to realistically expect your results to match everyone else doing it. Okay, so think about it. There's so many other guys and mentors and teachers out there and authors of books. Why aren't we all having the same results? Because it's a unique experience. Okay, and that's what makes this so difficult, because it's not a team effort. It's not a team sport, and you're not going to win by everybody else doing it with you. Okay, now we can cultivate a learning environment like we're doing here in forums and such, but the actually getting in the trenches, clicking the mouse and getting into trades and suffering the drawdown and or the riches that come with profitable execution, that's all on a personal level, and no one can share that. It's completely and uniquely yours, and you have to more or less accept that. Okay, so going into this, understand that you're leading yourself to a better understanding of trading, but you're always going to be theoretically a student of price. And always focus on success being measured in small incremental steps, and you're going to have to really submit to time, because while these concepts were going to be really concentrated in later portions of this series, it doesn't take away the work portion and the time that's needed for you to warm up to the concepts. Simply seeing it in one or two examples in a video format is not going to be enough. You're going to have to be in the charts, hunting, looking at it, studying it in hindsight, and then anticipating it in the future. So you got to submit the time. Now, realistically, what am I talking about in terms of time? If you're not willing to put 6 months into these concepts, turn it off now. You're wasting your time, and you're doing me no service at all, because I'm putting a lot of effort into this. So you should be doing the same thing. Invest the time as needed, and I'm talking minimum 6 months. All right, what ammo will you use and what targets? Well, the methodology that we're sharing here is based on a principle I learned in 1994. Yes, I was trading way back then. Now the principle is triple screen, and it's found in a book titled Trading for a Living. Now this was one of those little gems that I was in Columbia, Maryland, and I reside in Baltimore, Maryland. It's in the United States, in case you were wondering where that's at. And we had a trader's library. It was a store that really was mainly mail order over the internet type deal, but it just happened to be in Maryland. So I was fortunate enough to be able to drive there and go through their bookshelves and find some really interesting books. But because I was a fledgling technical analyst and I didn't have a whole lot of money to start with, I was very shocked to see how much these books were being sold as. And Trading for a Living, that title was exactly what I was looking for. Think about it. If you want to be getting into this industry as a trader, with no understanding whatsoever, except for the desire to want to make money and just sit home doing it, you couldn't find a better titled book than that. Trading for a Living. That personifies what traders do this for. They want to sustain themselves with just this as their means of income. So I purchased the book, and I'll be honest with you, when I first read it, I was like, man, this is ridiculous. I can't get anything out of this. So I basically wasted like $40, and at the time I thought that. And later on, when I got a little bit more mature in terms of what I was expecting out of price charts and such, I found that latter chapters in his book, I think if my memory serves me, it's page 285 or thereabouts. It's his concept of utilizing multiple time frames. And I framed the concepts on Alexander Elder, which is the author of Trading for a Living's ideas, and made subtle changes really. But if you really study these concepts, you're going to find the fingerprint of Elder all through this. Okay, and if one could claim authors of books as mentors, obviously he was my first one, if you will. Majority of my other work comes from Larry Williams. Now the premise is really to determine the likely direction of the market and then enter in that direction only. Now, in case you're wondering if it was just that one chapter that was useful, I'm going to recommend to you now that read the entire book, because it was my first trading text, but it was my first aha manual, because there's so many gems tucked inside the texts. It's really rich. Just the first few chapters dealing with psychology, being a young guy and just impatient, and I have OCD and I have attention deficit disorder, and I have a very difficult time focusing. And a lot of that stuff, because I grew up in an environment that when you read this you'll understand, I had a lot of similarities in the type of people that Elder was describing as problematic people in terms of trading, and how they have to overcome adversities psychologically, and how more or less it's a loser's mentality that they have, and what you're going to have to do to get beyond that. And I think it's an excellent read. So don't just take the chapter on triple screen as the only real nugget in that book. It's chock full of all kinds of wonderful insights, but really the crowning jewel is the triple screen chapter, and then obviously all of the psychological write-up that he does earlier in the book. Okay, we are going to give a homework assignment, okay, and it's going to be the mark. Now every sniper knows there is a target out there that he has to acquire, scope up, and then take down. Now, we're not going into a large list of technical things, but I'm going to give you an assignment for you to study. Now, I'm not going to limit you to any particular pair. You can use this assignment on any currency pair you want, but in this example I'm going to share with you, we're going to be utilizing the Fiber, which is the Euro USD pair. Okay. Hello folks, we are now looking at the MT4 platform, and we're going to open up a chart, use the Euro-USD pair, and we're just going to double tap the header of the chart and it'll maximize it. And we're going to change it to a candlestick chart, and we're going to remove the grid by hitting our right mouse button, go down the grid, or you can hold down the control button, hit G, it'll remove your grid in the background. And we're going to set this to a more friendly to the eye color scheme. And I right clicked on the mouse button and it gives me this menu where I click the properties, and then now we're in this little toggle box. I'm going to click on black on white, and that sets the chart to this as our viewing setting. And I hit the shift key here, which sends the chart back away from the right edge. Now I like to have a little bit of open space over here. The amount of open space that you may or may not want is up to you, but you can slide that little triangle here by clicking on it with your left mouse button and then just moving it along where you want it. Wherever you drop it, that's where the chart will end. Okay. So now what we're going to talk about here is I'm going to show you a 15-minute chart, and I'm going to ask you to look at this chart, okay, and I want you to study it and tell me what you see after a period of time. Now I'm not asking you to send it, obviously, in an email or anything like that. I want you to send it to the thread at fxgears.com's forum thread, and it's the thread that's self-titled with this video series. Very easy to find. What we're looking at here is a specific price model that we're going to cover in great detail during this 8-part video series. And I promise when you're done studying this, you're going to have far greater understanding in price action than any other resource available on the internet or in a book. You're talking about something that is so generic, it's going to be always seen in the marketplace and on any time frame. Okay, but for real world purposes, okay, for you to study, I want you to use this example here, okay, and start with August 2013, and right now at the time of this recording, it is August 14th, okay, and what I'm looking for is in terms of a repeating theme of what price is doing and how it could be anticipated going in the future. And I also want you to note specific criteria that you see repeating in the way price is moving from one swing point to the next. Okay, and what is a swing point? Swing points are like this here. This low with higher lows on either side of it. Here's a low with higher lows on either side of it. Every turning point here. Okay, these are all swing points. Now, if you don't understand what a swing point is, and if it's going a little too fast for you, the easiest way for you to learn to see what the swing points are, rather, on MT4, if you go up to the little insert tab, click on that, go to indicators, and go over to Bill Williams section, and in the top of the list it'll say fractals. Okay, if you click on that, it'll give you a little box here. Now I'm going to keep it red, and if you use this over here, this will tell you how big you want these fractal arrows to appear on your chart. Now I'm going to use this setting here, and I'm going to click OK, and what that's done is it creates all these little arrowheads. Okay, and the arrowhead just delineates a point at which, when one candle is surrounded by two higher load candles for a swing low, in this case it would be here, and for a swing high it would be a candle that has two lower highs on either side of it. Now I'll zoom in a moment to give you a better view of what that looks like, but for now you're not going to utilize every single one of these, obviously. Okay, but what I want you to do is I want you to train your eye. Okay, and let's zoom in just for a little bit. Okay, and I'll give you an example of what this is delineating here. The fractal arrow Let's take the toggle off so it doesn't move around as I'm talking. We'll use this one here. This fractal high has a lower candle to the left of it, and to the left of that it's a lower candle. Okay, and in other words, this candle here has a lower high candle and a lower high candle. So both these candles on the right have highs that's lower than the high of this candle, and these candles here on the left of it have lower highs than this candle high. So then the MT4 platform will mark this as a fractal high. Okay, now as we will learn in later video modules in this series, I do not require waiting until 2 candles after the high is formed. Okay, because many times you'll see that you'll miss the optimal entry point in terms of taking the trade. Okay, and vice versa, and looking at the low here, if you see a low with 2 higher load candles on the left of it and 2 higher load candles on the right of it, that would be a marker for a fractal low or swing low. Now look at this chart for a second before we take the fractal indicator off, and now we're just going to take this indicator off, and now I want you to look at the chart again. Can you see those same reference points without having that tool applied to the chart? Because that's what you're going to have to learn to do. Okay, because you need to see these forming in real time. And right now I'll give you an example. We have one forming here. This is a live price chart. It's not recorded. I'm not dubbing over something in the hindsight. This is really happening right now, and we have a low with a higher low here and a higher low here. That in itself is a swing low. So this could be a short-term low that may see price move higher from. Now we can't just base that simply on that alone. There's got to be other things and other criteria to add to it, but that's what you'd be looking for as a potential turning point. And if you look at every turning point or swing in the marketplace, you can see that that pattern exists. It's very generic. It's there all the time. You have a high with 2 lower highs surrounding it. Okay, every high and low swinging up down, that natural ebb and flow in the marketplace is seen with this characteristic in price action. Now let's go out to an hourly chart, and we're going to go and look at another sample size of price action, and we're going to look at the beginning of July. We're going to look at the first week of July. Yeah, this is good right here. Okay, and I want you to study this sample size and data as well. Okay, so we're looking at July 1st to, let's say, July 9th. Okay, and let's hold down the control key on your mouse, on your keyboard, and hit the letter Y as in the word yes, and that'll give you your vertical delineating bars. Okay, and what this is doing is the double lines is a Sunday, this is Monday's trading, this is Tuesday's trading in between the 2 vertical lines, here's Wednesday's, Thursday, and Friday's trading, and then we start a new week on Sunday. I want you to study June 1st to June 5th. Okay, in other words, this whole pocket of price action. This right here. Okay, so when you have your platform downloaded and set up at the default settings, you don't have to change anything yet. We're going to talk about all those changes and all the little cool indicators along the way as we go through each video. I promise you this is going to be the most boring one, but if you put the work in now, what I'm asking you to look for here, I promise when you look at the last video in this series, these 2 sample sizes of price data is going to be amazing. Okay, and you're going to be floored by what you'll understand by that point. Okay, so now looking at this sample size and data, okay, the questions I want you to focus on in terms of study is I want you to look at every swing point in this sample size. I also want you to look at the time of day that those turning points occurred. And I want you to look at the direction of which made the most in terms of pips. Obviously you can see it's been in a down move. But what characteristics were synonymous with just about every single one of these turning points? And I promise, if you study it, not just simply on a 1 hour chart, but break it down into a 15-minute chart basis, and if you look at it a 5-minute basis, it'll also be more insightful to you as well. Don't be discouraged when we go to part 2 and I show you some things that you should glean from the price action. With no understanding whatsoever about technical analysis, you should still understand time and price. Okay, in other words, what time of day did these particular swings take place? And MT4 is generally set up as a GMT platform. So in other words, all the time at the bottom of your chart here is all GMT time. Okay, and I want you to take notes, write it down in a book. Okay, and get yourself a little notepad. Okay, and this is your workbook for this whole video series. You're going to have pages of notes by the time we're done, I promise you. And the notes that you collect along the way are going to be worth their weight in gold. Okay, because this is insights that you just don't get anywhere else, and it's nearly 2 decades worth of insights that's coming to you for free. Okay, so I want you to appreciate that, because it takes a lot for me to, number one, put these together in terms of a teaching, and also be able to have a sense of continuity and hopefully get you to an end result that was in mind from the beginning, which is a greater understanding of price action and you as a trader and how to utilize that insight gleaned in your own demo trading and development as a trader. So now again, key points are what time of day every turning point in this sample size and the one we showed before, and what price levels did they occur at. Okay, and it means you need to be marking up your chart, drawing lines, okay, and scribble it up. Okay, I mean, don't be afraid to put notations on your charts. I don't know why guys in the beginning of trying to learn, they try to keep their charts clean. When you understand what you're looking for, then it's advisable. I like to keep my charts very clean, but in the beginning, be messy. Okay, make it fun. Get in there and draw some notes on this stuff. And in fact, if you go to, say you have this chart like you have it here, okay, go up to File, okay, and you want to save as picture, and you just click Active Workspace, and I'll show you what happens when you do that. By doing that, MT4 will generate a image file of your actual workspace, and by doing that, you'll be able to have a image file that will be in your web browser. And let's move over to that now, and you can take a look at what it's done. Okay, you can see it created an image file. Okay, and it's exactly what your chart showed in MT4 platform. Now I'm going to zoom out a little bit, as you can see, but it gives you all the detail and data here, and you scroll up and you can see everything here. Now it's, to me, I would advise you to take this image and print it out. Print it out, draw your lines on it with your own hand, with your pencil, ruler. Do it like that, okay? And get used to marking up the charts, putting lines and support and resistance levels, and make notations of time and price. And then I promise you, if you do this every single day for one pair, and it doesn't have to be the fiber Euro USD pair, it could be the cable British Pound USD, it could be the Japanese yen, it could be the Kiwi, it could be the Australian dollar, it could be the beast, Euro yen, British Pound yen, any pair of your choosing. It's not important as to which one you're choosing, but get real close to price action by studying one pair. It could be the dollar index as well. But what you're going to be doing is you're going to be building at least 30 days worth of sample size data. Okay, you want a whole month's worth. Okay, that means you're going to have to actually spend a little bit more than actual 1 calendar month, okay, because you don't have 30 trading days in a month. Okay, so now what you're going to be doing is you're going to be collecting at least 30 sample size of actual trading days, 30 trading days, and I want you to do that with a 5-minute chart, and I want you to do that with a 15-minute chart for every single day going forward for whatever particular period you like to trade. And I want you to mark off every single time the market turns intraday and makes the high or low of the day. I want you to make a reference of what time it does it and what time it ends the opposite end of the range. In other words, what time did it make the high of the day, what time did it make the low of the day. And you need to do this for 30 days. And I promise you, by the time I end with that exercise, you're going to have an immense understanding of price action and what routinely happens in the financial markets.